Gurmeet Chadha also joining in, Managing Partner and CIO at Complete Circle. Gurmeet, hi, great to have you on this morning. A terrible sequence of events since yesterday. But, you know, our job right now is to tell people who have invested in the markets what could happen and what they should do. So just let's start with your take on that, Gurmeet. Is this the stay put and hope things blow over moment, or is this the India story is solid? Let's go ahead and find some opportunity moment.
Yeah, hi, Tabata. Good morning. I think this geopolitical inflammation has been now going on for a while. I think it's now been almost 4 years since the Russia-Ukraine conflict started post-COVID. And something or the other keeps coming. I think this one looks a little more in terms of the ladder of escalation. Because they've actually targeted, the commanders of the Iran army as well as the nuclear side. So, clearly the objective is very clear. And I think at such large scale attack would obviously have, while I'm not a geopolitical expert, but with some US backing, and Trump has been talking about it for past couple of days. So my sense is I go by the old template. I'm not an expert who can tell you how much this will escalate. But if you go by history, especially last 4 years, any such correction due to things which are non-India related have proven to be a buy on dips kind of a thing. But things can, as I said, quickly escalate, even de-escalate, depending upon how the situation does. So I agree with Dinsha sir. I think be focused on where the earnings are likely to be good, the order book is likely to be solid. I think defense is one space. I've been talking about it that will surprise for the next 5, 7, 8 years. I think the export numbers, the kind of level of indigenization we are doing. There was another weapon we tested yesterday on the loitering ammunition side, which had vertical launch, which is called VTOL, which can vertically go up and then land. And that's something which is another thing we have added to the arsenal. So be focused there wherever you get opportunities, add there. And I think financials and rate sensitives. I think what RBI has done is it will gradually get realized over the next few months in terms of the message. I have not seen CRR ratio below 4 for a very long part of my stock market career. I've also not seen the gap between 10-year US and Indian 10-year bonds being sub 2%. So I think there is a tactical shift happening, which the bond markets are telling you RBI is trying to position. And I think that to me is a bigger story. These dips and corrections are, everything is on the way.
Sure, but is there enough margin of safety when it comes to defense? That's really the question, right?
No, there isn't in a lot of counters.
Sure.
I agree, Harsh, because that's how these sectors are. They will be irrational both ways. When it corrected also, post the run up, it was very severe, almost 40, 50%. And when it did not do well, it did not do well for years, leading before 2022. So, nature of this is because the orders are lumpy. The execution is long gestated. So that's the nature of the game. Same is the case with, let's say, CDMO space and pharma. Wherever the nature of the business is lumpy, you got to position yourself for long term and not play this in and out. Nobody can do that exactly. But I point is well taken. A lot of stocks in defense are also going up in terms of just because it's a defense stock and not very solid fundamental reasons behind it. So you got to be careful. So we have, for example, positioned ourselves in solar industries, which has been our top holding for a while now. We've been there now for almost, I don't know, maybe 8 years now. Then we have BL, we have Zen Technologies. We have positioned ourselves to play it for the long term. We are not in the game of moving in and out.
Dinsha, let me just, get your take on how you are seeing some of these oil and gas moves. And of course, with a 12% surge, many are saying that the crude surge can also come back. I don't know if you'll have as sharp a drop as you have seen the uptick, because some of this is going to continue. And Iran is a large supplier to China, even if it's been blocked in several other places. If there is that kind of a change in Iran on ground, do you think oil and gas as a space from the Indian perspective, this question for Dinsha, needs to be looked at very, very closely?
So basically, what has the government done? I mean, all along, they've been allowing the oil and gas companies, the downstream companies rather, to earn disproportionate profits even when the crude prices dipped, right? They did not penalize them. They didn't ask them to cut the fuel prices when the dip happened. So I think this government is quite sane enough in believing that, look, when the crude prices are up, don't increase your price. When they're down, just hold on to your price and make money. So I think on a longer term basis, it all evens out. And frankly, I mean, looking at the way these crude stocks have reacted, I mean, rather the refiners have reacted, I think my feel is it's a time to pick up selectively in that space per se. We're quite comfortable even at these levels.
And Dinshaw, Harsh also joining in. Your quick take with regard to what this has in terms of impact in your opinion. Is this kind of oil price sustainable? And I'm talking from an economy perspective. Of course, globally as well as domestically. Will this mean higher inflation if this stays higher? Is this kind of a spike sustainable? What's your logical conclusion to that?
So look, the good part is that the US is quite thick with the OPEC countries now. I mean, he's made overtures over a period of time, and the OPEC is, if you remember in the recent past, they've taken cuts in their production. So I'm sure the OPEC countries have been more than happy to overcome that. I think a stable crude at $70 odd will be what everybody would need, 70 or lesser. 65, 70 is the band that one is looking at. So I don't think this is sustaining. This is going to sustain. Already you've seen from the highs, it's come back to, I mean, the crude today, the spike that happened, I think 12, 13%, it's down to around 7, 8% now. So that way, I don't think it's going to sustain at these levels. And frankly, I mean, our belief is that it's a passing situation. And I don't think even this geopolitical tensions, as I'm not an expert here, but knowing that the US is getting ready to get involved, I'm sure any country will back off. They won't want that to happen, probably do a knee-jerk reaction and then probably call it a truce and take off from there. So.
And Dinshaw, well aware that you have a position in Zamato. What does Rapido, this entire development around Rapido mean for the space, quick commerce space as a whole, food delivery, quick commerce, but also for Zomato in particular? Are you looking at the investment in a different manner now?
So it's a different ball game altogether. I mean, Rapido entry in this particular quick commerce space. If you remember, Uber tried in, I mean, they do that in US, but India, they failed miserably in the food delivery space. So I don't know how far a quick commerce will work for a kind of Rapido. I mean, they have probably logistics, but what about the kind of dark stores that are needed and stuff like that? I don't think it's going to work out. Frankly, I mean, even if you see the board has allowed them only, I think something like $5 million to be burnt, which can be burnt over a few days. I mean, that's the kind of business that these guys are trying to get into. And frankly, I mean, I don't think it's going to be a major challenger. Maybe there'll be others coming in too. I mean, I don't think Rapido is the only guy who will come in. You saw the likes of Zepto coming in. Zepto, if anything, I mean, the IPO plans are in the back burner. They're looking at private equity raise again. So you've seen the kind of crunch that is needed out here, the kind of pressures that are built into this business. And I'm sure a few other houses will also come enter this. But the fact is that there's enough potential out here. We've seen this in markets like China with quick commerce. In fact, Meituan, which is one of the biggest guys in China who's into food delivery and quick commerce. Earlier, his mix used to be what, 60% food delivery. Now it's the other way around. It's 60% quick commerce. So it's obvious that there's a huge potential here waiting to happen. So.
Okay. Thank you so much, Dinshaw and Gurmeet, for speaking with us this morning. You know, when the street is really trying to figure out what's happening, and we need to get a perspective on what's happening globally as well.